Hello friends, I welcome to my YouTube channel. Today's my topic is government budget and the economy. Please subscribe our channel and hit the bell icon for more updates. Today's topic is government budget and the economy. First topic is objectives of government budget. Allocation function of government budget. Government provides certain goods and services which cannot be provided by the market mechanism by exchange between individual consumers and producers. For example, our national defense, roads, government administration, etc., which are the referred to as a public goods. The major two difference between private goods and such as clothes, cars, good items. One of the benefit of public goods are available to all and are not only restricted to one particular consumer or wear or shirt. This will not be available to others. However, if we consider a public park or measure to reduce air pollution, the benefit will be available to all. One person consumption of a good does not reduce the amount available for consumption for other, and so several people can enjoy the benefit. That is, the consumption of many people is not rival rails. And the second difference, in case of the private goods, anyone who does not pay for the goods can be excluded from enjoying its benefit. If we do not buy a ticket, you will not be allowed to watch a movie at a local cinema hall. However, in case of a public goods, there is no feasible way of excluding anyone from enjoying the benefit of the goods. That is why public goods are called non-excludable. There is, however, difference between public provision and public production. Public provision means that they are financed through the budget and can be used without any direct payment. Public goods may be produced by the government or the private sector. When goods are produced directly by the government, it is called public production. Next topic is redistribution function of government budget. The total national income of a country goes to either the private sector, that is farm and household, known as a private income, or the government, known as a public income. Out of the private income that reaches the household is known as a personal income, and the amount that can be spent in the personal disposable income. The government sector affects the personal disposable income of household by making transfer and collecting taxes. It is through this that the government can change the distribution of income and bring about a distribution that is considered fair by society. This is the redistribution function. Next topic is stabilization function of government budget. The overall level of employment and policy prices in the economy depend upon the level of aggregate demand, which depend on the spending decision on millions of private economic agents. Apart from the government, this decision in turn depend on many factors such as income and credit available. If any period the level of demand may not be sufficient for full utilization of labor and other resources of the economy. Since wages and prices do not fall below a level, employment cannot be brought back to the either level automatically. The government needs to intervene to raise the aggregate demand. On the other hand, there may be at times when demand exceeds available output under condition of high employment and thus may give rise to inflation. In such situation, a restrictive condition may be needed to reduce demand. The intervention of the government, whether to expand demand or reduce it, constitutes the stabilization of function. Next topic is classification of receipt. Revenue received. Revenue received are those received that do not lead to claim on the government. They are therefore termed non-redeemable. They are divided into tax and non-tax revenue. Tax revenue, it is an important component of revenue received, have for long been divided into direct taxes, personal income taxes, and the forms corporate taxes. Indirect taxes like taxes duties levied on the goods produced within the country, custom duties taxes imposed on goods imported into or exported out of the India, and the service tax. Other direct taxes like wealth tax, gift tax, state duty, now abolished, have never brought into large amount of revenue and thus have been referred to as a paper taxes. Form are taxed on the proportional basis where the tax rate is particularly proportion of profit. With respect to exercise taxes, necessities of life are exempted or taxed at low rates. Comfort and semi-luxuries are the moderately taxes, and luxuries, tobacco and petroleum products are taxed heavily. Non-tax revenue. Non-tax revenue of the central government mainly consists of interest received on account of loans by the central government, dividend and profit on investment made by the government, fees and other received for services rendered by government, cash grant in aid from foreign countries and the international organizations are also included. Capital received. The government also received money by the way of loans or from the sale of its assets. Loan will have to return to the agency from which they have been borrowed. Thus, they create liability. Sale of government assets, sales of shares in public sector undertaking PSUs, which is referred to a PSU disinvestment, reduce the total amount of financial assets of the government. All those received of the government which create liability or reduce financial assets are termed as the capital received. When government take fresh loan, it will mean that in future this loan will have to be returned and interest will have to be paid on those loans. Similarly, when government sell an asset, then it means that in future its earning from that asset will disappear. Thus this receipt can be a debt creating or non-debt creating. Next topic is classification of expenditure. Revenue expenditure is incurred for purposes other than the creation of physical or financial assets of the central government. It relates to those expenses incurred for the normal functioning of the government department and various services, interest payment on debt incurred by the government, and grants given to state government and the other parties. The main item of the non-plan expenditure and interest payment: defense services, subsidies, salaries and pensions, interest payment on market loans, external loans and from various reserves fund constitute the single largest component of non-plan revenue expenditure. Defense expenditure is committed expenditure in the sense that given to the national security concern there exists little scope for the drastic reduction. Subsidies are important policy instrument which at the aim at the increasing welfare. Apart from the providing implicit subsidies through this underpricing of public goods and services like education and health, the government also extended subsidies explicitly on items such as expert interest on loans, food and fertilizer. Capital expenditure: there are the expenditure of the government which result in creation of physical financial assets or reduction in financial liabilities. This include expenditure on the acquisition of land, building, machinery, equipment, investment in shares and loans advanced by the central government to state and union territory government, PSUs and other parties. Capital expenditure is categorized as plan and non-plan in the budget document. Plan capital expenditure, like its revenue counterpart, relates to a central plan and central assistance for state and union territories plan. Non-plan expenditure covers various general social and economic various provided by the government. The budget is not merely a state of receipt. Since independence with the 5